Asset Management Corporation of Nigeria and Asset Management Partners join forces to tackle 4.6 trillion naira debt burden. Oil little change as investors eye Iran-US talks. Asia-Pacific markets fall as investors assess Moody's US downgrade. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Now let's bring you up to speed with business development. The Central Bank of Nigeria recorded a significant decline of 4.145 trillion naira in net loans and receivables in 2024, driven primarily by a reduction in its overdraft exposure to the federal government and changes across other loan categories. According to the Apex Bank's audited financial statements, net loans and receivables at the bank level dropped from 16.122 trillion naira in 2023 to 11.977 trillion naira in 2024. At the group level, the figure declined from 15.091 trillion naira to 10.959 trillion naira, reflecting a 4.132 trillion naira drop. The most substantial adjustment came from the overdraft extended to the federal government under the Ways and Means provision. The US dollar closed at 1,599 naira to a dollar in the official exchange market, according to data from the Central Bank of Nigeria. How much is the naira exchanging for the currencies? Let's take a look. And the will move to deepen its developmental impact and drive inclusive economic growth. The Development Bank of Nigeria, DBN, has unveiled a 5-year strategic plan that aims to create 2 million new jobs across the country by supporting micro, small and medium-sized enterprises through expanded financing, capacity building and technical support. Managing Director of DBN, Dr. Tony Okpanachi, said the bank's renewed strategy covering 2025 to 2029 will significantly scale its footprint across Nigeria's underserved business landscape. He also added that DBN's plan also reflects DBN's focus on inclusive finance. Under the new target, 40% of all loans will go to women-led MSMEs, 30% will be directed to youth-led enterprises, and 15% of disbursements will target businesses in economically disadvantaged regions. This approach builds on the bank's strong record of inclusive lending. Another priority area in the new strategy is green financing, with DBN setting a goal of 75 billion naira to 100 billion naira in outstanding loans focused on environmentally sustainable businesses. In addition, the bank plans to train 500,000 MSMEs over the next 5 years, significantly expanding its technical assistance and advisory footprint. In a new move to accelerate the recovery of over 4.6 trillion naira in outstanding debts, the Asset Management Corporation of Nigeria, AMCON, has outlined fresh strategies aimed at intensifying pressure on chronic debtors, with a major emphasis on strengthening collaboration with its asset management partners. The initiative was unveiled in Abuja, where AMCON's new executive management team, led by Benga Alade, as managing director, chief executive officer, hosted AMPS under the theme AMCON Debt Recovery and Renewed Hope Paradigm. Speaking at the forum, Shola Lamidi, AMCON's executive director in charge of resolution, highlighted the corporation's new direction, which involves proactive methods to debt recovery. He emphasized that the renewed engagement with AMPS will not only be sustained but scale up for greater efficiency. Lamidi said the session served as a platform to reflect on the journey so far. Its economic forecast season, and the World Bank says Nigeria's GDP will increase by 3.6%, while inflation is expected to average about 22.1%. To speak on this on Business Express today is an economist, Yushew Aliu. You're welcome to Business Express.
Thank you. Good afternoon. Thank you.
Okay, beautiful. 3.6. That's what the World Bank is looking at for Nigeria. And is this actually within the, what will I even call it, the goal of actually achieving a $1 trillion economy?
Of course, yes. One fundamental fact about the projection is the revision of the GDP, which was done earlier this year. The World Bank has to be considerable to the effort made by the Bureau of Statistics to include bundles of goods. However, the GDP prospect, especially this year, 2025, has to do with oil and gas. And if you check carefully, there is increase in production of crude oil, and not only production of crude oil, there is also stable production of refined product within the economy. And if these continue to show the light, then it means that there is much prospect, especially with other stakeholders, including the Development Bank, as you pointed out, where 2 million jobs are targeted.
Okay, now the forecast talked about 22.1%. That's inflation expected to average about 22.1%. We've seen inflation numbers moderated somehow. And how significant is the 0.52% drop in the broader context of Nigeria's inflationary trend over the past year?
The inflation trend in Nigeria is something that we have to be more careful, especially in projecting it, because it's resulted as a result of supply bottlenecks and also the result of rising population. So two things are clear from the projection. One is the component of rebasing, which was done early this year. Also, a lot of components of goods are included in the rebasing exercise. But what is more significant is, like I said, supply bottlenecks and the multiplier effect of PMS pricing in Nigeria, which obviously, if it continue to decrease right from the Dangote production zone, then it means that inflation is likely to be moderating within that range.
Okay, food inflation dropped to 21.26% year on year. What are the main reasons behind this particular decline?
A lot of factors. You know, federal government has advanced a lot of food waivers, which increase the availability of food in the economy. Remember that the international survey that was conducted under Food Security Index revealed that we have to check first availability of the food, second affordability. Then the third component are quality and safety. And when you check, relatively prices are going lower because there is increase in supply, and also there is increase as far as production level is concerned from different agricultural zone within the economy.
Okay, some quarters attributed the moderation we are seeing to importation of food. How true is this?
That is what I mean by food waiver. Definitely, food waiver has assisted the moderation, and that is what we have been calling the federal government to checkmate, because you have to check the food requirement. Like I said, food security does not mean availability. It also implies affordability. So in the situation where you have large number of waivers given, then definitely it is expected that the average production capacity of a meal will increase, and definitely by increasing with that removal of tax waiver will also reduce the price, and that reduction in price is what is moderating the inflation.
Where does that leave our farmers and boosting local capacity?
Boosting local capacity has to do with the security of the production zones. Unless there is fully secured agri production zone, then unless it is secured, we don't have much guarantee that we are going to produce what the economy is looking for in terms of availability. That is one aspect. The second aspect is the cost of input. Cost of input in these agri practices is increasing. It has increased significantly, and therefore other waivers that is also advanced by the present administration in terms of importation of waivers in rice mill, it has also assisted the moderation. So obviously cost of input matters, security matters, as well as the availability of capital to invest in agricultural practice.
You know, so much has been said around, a lot of this somehow dissuades farmers. So how do we address this situation whereby we boost local capacity and reduce much of this importation of food, and at the same time bring inflation at the right level?
Importation of food is a short-run effect. There must be importation, because if you check the trend 2023, 2022, you realize that the prices continue to go higher until when the Bureau of Statistics decided to review the component. So when you take the trend from 2022, 2023, obviously you need to moderate the prices by augmenting the deficit that we encounter in the food supply zones. Meanwhile, one fundamental aspect which this importation has checked is that it has checked those who are in the middlemen, who are hoarding this product and who are not taking this product to market, and which has not helped the prices to be moderated. But with the importation, we have seen how a lot of these middlemen are pushing out what they stored in different locations into the market, and that is why you find relatively moderated prices in every aspect of our markets.
Okay, right now the Monetary Policy Committee meeting of the Central Bank is actually holding, and they expect to come up with a particular rate. Should they consider their monetary policy stance on this?
The monetary policy stance, I can still be positive that based on what we saw previously, instead of putting 100 basis points, the Central Bank or the Monetary Policy Committee has resolved to put in significant figure which will also assist in the moderating of prices, especially that the moderation of those monetary policy rate is moderating the cost of borrowing and also moderating prices at the larger scale.
Okay, now many Nigerians may not feel this inflation drop in their daily expenses. How do you explain the disconnect between the official inflation figures and what is actually happening in reality in our markets?
In reality, if income remains stagnant, then definitely higher prices will reduce purchasing power. And that is what has affected many families. Their purchasing powers has been eroded, and since it has been eroded, even if prices are dropping, the capacity of individual in the market has already been reduced. It is only now that when prices continue to moderate, then some little bit of adjustment can be made by household in order to attend to other precious demands of each and every household.
Okay, now, you know the 2025 projection is to actually achieve a 15% decline in the inflation figure. Do you see us actually achieving this, or what do we need to do to be in that position where we could possibly achieve that 15%?
Remember, we are in rainy
figure?
season, and there is going to be a lot of challenges as far as supply of food items in the market. We are already in May ending, and by the time we enter June, it's half year. So what we are experiencing, 21-22%, this is going to be the trend that is going to be manifesting from time to time between May, June to December. So, but I think also there is need to have proactive decision, not only by the federal government in terms of food waiver. There should be an intervention by local authorities, including the state, to try and moderate prices and of agricultural input, especially fertilizer and other necessary input that can help to moderate prices in the long run.
What should we expect from the Monetary Policy Committee? Is it to hold or to tighten or to loosen?
We are expecting the monetary policy to hold at that particular figure which has already been adopted. But even if there is going to be a shift, we are not expecting a larger shift, because if you are to moderate prices in an economy, then there is need also to moderate cost of borrowing prices, which can assist in stabilizing prices at every level of production.
Okay, thank you very much, Isho Aliu, for your thoughts.
Thank you very much.
Now, moving on. 1.5 billion naira worth of contraband have been intercepted by the Nigerian Customs Service Federal Operations Unit Zone A. Joel Popola reports that the controller Muhammad Shuaibu says the unit is strengthening intelligence gathering and interagency collaboration to tackle economic sabotage for improved revenue generation.
Between illegally imported foreign used vehicles, 82 packs of tramadol and 10 sachets per pack, 246 kilograms of cannabis sativa, 290 jerrycans of premium motor spirit, then 4 sacks of used clothing. 4 suspects were arrested in connection with the various seizures. This achievement testifies to our unwavering dedication to protecting our economy and citizens. We will continue to collaborate with sister security agencies, the border communities, to dismantle the networks engaged in illicit activities.
The Renewed Hope Initiative's Women Agricultural Support Program, a flagship project of First Lady Senator Oluremi Tinubu, has empowered 200 women in Yobe State through agriculture. Under the supervision of Yobe State's First Lady Hajia Hafsat Kolare Buni, the initiative aims to enhance the economic and social well-being of women in the state, promoting sustainable livelihoods and agricultural development.
A future where every woman has the tools, the support and the confidence to succeed.
I'm really happy. I really appreciate for their effort. They say a good leader must show a good example to their followers. They have already shown an example to us.
And out energy oil prices were little change on Monday, with investors eyeing the outcome of Iran-US nuclear talks and key economic data due from China to assess the impact of its commodities demand following trade tensions with the United States. Brent crude futures edged down 5 cents to $65.36 a barrel, while U.S. West Texas Intermediate crude was at $62.52 a barrel, up 3 cents. The front month June with contract expires on Tuesday, and the more active July contract fell 4 cents to $61.93 a barrel. Ghana's national currency cedi sees a significant rebound driven by improved sentiment, gold accumulation, and trade policy shifts. Let's now take a trip to the commodities markets. Now, consumer goods sector shines as all share index firms above 109,500 points ends in the green. Over to Olainka Ojo for a summary on how stocks fared in Nigeria last week.
The NGX All-Share Index and market capitalization appreciated by 0.90% to close the week at 109,710.37 basis points and 68.953 trillion naira. A total turnover of 2.606 billion shares worth 63.785 billion naira in 77,593 deals were traded by investors on the floor of the exchange. The financial services industry led the activity chart with 1.540 billion shares valued at 28.963 billion naira in 32,805 deals, contributing 59.08% and 45.41% to the total equity turnover in volume and value. The services industry followed with 286.833 million shares worth 1.711 billion naira in 6,280 deals, while the third place was the consumer goods industry with a turnover of 202.565 million shares worth 7.439 billion naira in 9,708 deals. Trading in the top three equities, namely FCMB Groups PLC, Access Holdings PLC, and Tantalizers PLC, accounted for 600.684 million shares worth 6.570 billion naira in 7,201 deals, contributing 23.05% and 10.30% to the total equity turnover in volume and value. A total of 138,638 units of ETPs valued at 26.703 million naira were traded in 148 deals. For bonds, a total of 121,749 units valued at 118.695 million naira were traded in 56 deals. On summary of price changes, 61 equities appreciated in price during the week, 31 equities depreciated in price, while 56 equities remained unchanged. Olainka Ojo for Business Express.
Now, Asia Pacific markets fall as investors assess Moody's U.S. downgrade China data. Maria Dozakari has a detail on how the global stock market is shaping up. It's over to you, Maria.
Well, international markets are in a bearish trend this afternoon, Musa. We have European stocks, which are continuing their downward trajectory since the UK and European Union came to a deal to reset post-Brexit relations. The DAX of Germany dropped 0.16%, FTSE of UK was down 0.53%, CAC of France follows at 0.74%. Asia markets fell as investors assessed the latest slate of economic data from China. Nikkei 225 of Japan was down 0.68% or 37,498 basis points. We have Shanghai Composite of mainland China marginal at 3,367 basis points, and the Hang Seng Index of Hong Kong was lower at 0.25% or 23,332 points. In the U.S., stock futures tumble on as downgrade of the U.S. credit rating by Moody's causes Treasury yields to spike. The Dow depreciates by 0.61%. We have S&P 500 following at 0.70%. Nasdaq Composite reflects at 1.49%. Africa market reflects other regions and are in a downward trend. South Africa JSE Top 40 slips 0.92%. Namibia All-Share Index follows at 0.05%. Ghana was down 0.10%, while Tunisia Tune Index was higher at 0.24%. That's an overlook of the global market for today. I'm Maria Adozakari. It's back to Musa.
Maria, thanks for that update. Well, this is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTS channel. Business Express returns on Tuesday by 9:30 a.m. I am Musa Abubakar. It's good to have you. It's been a pleasure having you as a company.